Hey, welcome everyone to another episode of It Depends. This week we have Davis with DY Law going over, do you need an LLC? This is a very common question that he gets. He has a giant team that just always has to work on creating LLCs for people. So we wanted to make sure that you guys know the ins and outs and decide which type of LLC that you need to set up that's best fit for your situation. So without further ado, I'm going to turn it over to my legal buddy, Davis Yu.
Okay, well, hi, everybody. Thanks for joining in today. So today we're going to be talking a little bit about LLCs. Of course, there's different structures, different entities that we can create, but it all depends, right? It depends on what your priorities are, depends on your assets, depends on your future plans in regards to what you want to do with your real estate investment properties, whether you want to create an LLC, corporation, let's just set up a trust, just risk it all and just have like an umbrella policy. Everything's really, it depends on your situation. But today we're going to be talking more so specifically about LLCs. Going to cover a little bit about alternatives to an LLC. And then ultimately we can, I'm going to try to run through these slides so that I can answer some more specific questions that you might have, which I'll probably answer with it depends, or I'll probably have you shoot me an email so that I can provide you with more insight or in a detailed response that I might not be necessarily able to provide you with during this presentation. So here we go. We're going to start. Do you need an LLC? Okay, so of course I have to give you the disclaimer as I'm an attorney. Your receipt of this information does not constitute or create any attorney-client relationship between yourself and myself or yourself and my firm. The presentation and any comments or information that I give you today, it's simply for educational purposes, and nothing should be considered to be legal, accounting, or tax advice. So if you have any further questions after we have this webinar today or the information provided in this presentation, you want to consult with your own attorney, accountant, or tax professional, because depending on your situation, the answers might vary. It's a quick agenda, basics, formation, liabilities, any alternatives, and we're going to wrap it up with Q&A. So just some quick statistics. There's approximately 20 million rental properties containing 48 million rental units in the US. 10.6 million tax filers declare rental income. 25.8 rental units are owned by a business entity. So that can be either an LLC or a corporation, right? And, rent rates have increased. So it just goes to show that it is profitable depending on how you set it up. But also being a real estate investor, bad things can happen. So as a landlord, you can be liable for slip and falls, negligent repairs, just failing to repair within a reasonable amount of time, depends on your jurisdiction. Unknown dangers and conditions arising out of your property, and some things like not treating mold or rodent infestations, right? And who can bring this lawsuit? It could be tenants, it can be guests or visitors, it can be hired workers, it can be trespassers, and it can even be your neighbor. Personal liability can also arise from things. So things that I mentioned right here, they're inside liabilities. So things that occur like within the actual property or the LLC itself. Personal, like outside liabilities, are things that happen to you or your other businesses outside of that LLC or the investment properties that you guys have. So outside liabilities can also include like car accidents. For instance, if you rear end somebody and they decide they're like a celebrity and now they can't work forever. Defaulting on bills, loans, payments, breach of contracts, failing to pay child support, work-related accidents, if you own another business, if you get sued while operating another business, or just if your business fails and you have outstanding debt, those are outside liabilities where creditors can try to come and obtain your assets held in a real estate investment entity. So some basics. I'm not sure. I feel like with SARE, we always get a wide group of different investors, people that are a lot more experienced, that have a lot more properties than we have than beginners. So I'm just going to cover the basics because, like I said, I don't know who you guys are yet. So An LLC stands for limited liability company. It's a type of legal structure that you can set up for your business so that you can separate your personal assets from your business. It creates a hybrid structure that combines a feature of a corporation while giving you the tax efficiencies and operational flexibility of a partnership. And the owners of LLCs, they're considered members, similar to how corporations shareholders. So it can consist of one or more. So some advantages and disadvantages of LLCs. So some advantages, limited liability. If you set it up properly and make sure you follow like the corporate governance rules, the creditors can technically only go after your assets within the LLC. Now, if you do things such as like commingle funds, don't follow the rules, don't update your statement of information, things of that nature, then you pretty much lose your limited liability and defeating the purpose of having this set up and wasting money. So depending on which state you set up your LLC, you can obtain anonymity. It can be member or manager managed, meaning you can technically be the owner, but you can designate a property management company, you can designate another individual to serve as the manager of the LLC. You can choose different tax elections, such as partnerships, S corps, or if you're a single member and you don't elect to be an S corp, you'll just be considered a disregarded entity. A way lower startup cost than a corporation because LLCs definitely have less rules that you have to follow compared to corporations in terms of like maintenance and upkeep of corporate documents. And yeah, so going along that, it's less stringent upon like record keeping and formalities compared to a corporation. You do have a little bit more flexibility in distribution of profits to your members, and you are able to deduct operating losses and expenses. So some disadvantages: you may have to pay self-employment taxes depending on your tax election. Of course, the thing that all of us hate to do, like to pay the annual franchise tax of $800, which you cannot avoid if you are in California. They don't have shares. So when you transfer ownership, you're actually transferring like a membership interest, which can require a little bit more work and complications versus a corporation where you just can issue additional stocks or just sell or transfer over your stocks. The profits must be distributed to the owners or reinvested into the business every tax year, but depending on who your CPA is, they might have some workaround around that, but I'm not going to be giving any advice on that end. Unfortunate part is dissolution of the business will occur if a member leaves, unless you specifically state in the operating agreement that the business can continue regardless of that. So just a quick basic ownership structure here. So the first chart here on the left with is just if you own your rental properties or properties just under your own personal name, right? 1, 2, 3, rental property 1, 2, 3. Second is if you own it through your LLC, if you own the 3 properties through one LLC. And then the third here is you having an LLC for each different entity. Now, for the purposes of me not having to create these charts and making it super complicated, there are additional diagrams that I should have provided. So if you look at the third on the right, you can technically put like a holding company that owns the LLC that owns the properties. You can have a holding company that owns 3 separate holding companies that own each LLC separately. You can have it in different jurisdictions or states. But this is just for you to just have just a general gist of how you can structure it. So yes, now of course, if you purchase the property and you want to put it into an LLC, you can transfer it here. You want to make sure you transfer the property but with the grant deed into the LLC, and so that the LLC owns the actual property. You want to make sure you, when you do transfer this, you want to contact your lender to make sure that the transfer is not going to trigger any additional payments or any other complications. And as I've mentioned, you want to record a deed to transfer because if you don't do that, then technically you would still be the owner. And of course, since the title of the property isn't going to be in the name of the LLC, you want to make sure that the documents refer to the LLC as the landlord as well. And then when you create the LLC, you want to make sure, like I said earlier, you don't want to commingle any funds. So you want to make sure you have your bank account set up before you conduct any business, right? Before you start renting out your properties and collecting rent. Just sorry, I was just trying to see if there was any questions, and I think I see a couple, but okay. So the information provided, generally, when you look online, they're necessarily going to be mentioned for like long-term rentals or properties where you're going to be leasing out for a long period of time. But I just wanted to include just a quick slide here for people that like to flip houses and sell them, right? Some pros and cons to that, right? Of course, the pros are going to be if you purchase through an LLC, of course, you're still going to get personal protection of your personal assets will be protected if you set it up properly in case the development or the project, an issue arises out of that. You can, get tax deductions for cost of purchase, cost of materials, labor, all that in regards to the flip. You can also save on closing costs, which is one of the reasons why people do these for short flips, is because instead of having to deal with transfer of title, doing all this on a personal basis, and also pretty much having to provide all the documentation, you simply just sell the company. So you would just be transferring your membership interest in the company, selling it like 100% of my interest in an LLC to this person or another LLC or a corporation, which already has the property as its asset, versus having to, do double the work. Some people, they don't like to do this, but that's one of the pros and one of the reasons why a lot of my clients do this. Another pro is it builds your business brand and credibility, some tax flexibility depending on your tax situation. Some cons of having an LLC for a quick flip is oftentimes raising capital is more difficult, or getting loans, higher interest rates. Also, most of the times, if it's a new LLC, you're going to have to put a personal guarantee anyways on these loans. So it's people think it defeats the purpose, but even if you have a PG, you still protect yourself in terms of liability. And then, of course, difficulty transferring ownership at times might arise depending on who wants to purchase your property or your LLC that owns the property. And of course, the whole due on sale clause that everyone's always concerned about, it might trigger it, but depending on how you structure it, the purchase, if they're going to pay it all off, then it doesn't really even matter, right? So just things to consider. And then just quickly, how to form an LLC in California. This is specifically for California, but California likes to be super strict. So more likely than not, your respective state is going to have something similar. What you can do is you can just Google the name of your state, Secretary of State, like LLC formation, and they should provide you with the list of requirements and action items that you have to take in order to register your LLC. So if you just Google, Minnesota Secretary of State LLC formation, then that should pretty much pull up what you need. So yes, you want to think of a name, right? Check for its availability. And then you want to make sure you have a registered agent who's for service or process. It can be an individual or a professional service. And then, of course, you want to create the articles of organization, which is something that you simply put like the name that you want, the name of the owner, and the business address, things of that nature. And it's the documentation that you're going to have to present to the Secretary of State. It's almost like your application for the LLC. You have to pay your filing fees of $70 in California. However, in California right now, the first year is waived at least for the annual franchise. And depending on how you set up your LLC, the $70 is waived as well. So more importantly, the operating agreement, which pretty much is the document that dictates how your LLC is going to operate its business inside and out. It is required in California. So if you don't have so the thing about operating agreements it is required, but a lot of times people do it like later because they either do it themselves, they either create the LLC themselves, or they use like third party like LegalZoom or whoever, and then they just get like a boilerplate OA, or they just don't get one at all. You are required by law to have it in order to obtain all the protections. However, there are people that don't do it, and it's just kind of one of the situations where it's just a matter of if you get caught. If you get caught, then that's when you're going to have your personal assets now on the hook. Because usually if there's a lawsuit, the first thing that they ask for is going to be the operating agreement of that LLC, because they know that sometimes people don't follow the rules. And also the operating agreement lists what happens if there's a lawsuit, things of that nature. So you want to make sure you have an operating agreement. And you want to make sure, if you have the funds, if you have the money to be investing into a rental property, you want to talk to a couple attorneys or an attorney and try to figure out, like, your situation and have a custom drafted operating agreement for you, because having a boilerplate template is not really going to protect you if and when something happens. But for those that, don't have the funds to do it, having something is still better than not having it at all. So just get it from, I guess, LegalZoom or whatever, but read through it and make the revisions you need. Of course, statement of information, which you need to file. If it's an LLC, it's going to be every other year in California. Pretty much just keeping the Secretary of State updated with any changes in ownership, management, and just making sure that they have all the correct addresses on file, so that if there is some sort of issue, they have the correct address to notify you. And then, of course, with LLCs, just make sure you're on top of your tax obligations. Talk to your CPA. Of course, you have to get the EIN number if you want to open up a business bank account, right? So you want to do that, and paying the annual franchise tax fee in California. So this is the whole debacle of, if I create an LLC in Wyoming or Florida or Oregon or wherever, do I still have to pay this? So it depends where you reside in. If you are a resident of California, it's going to be very difficult to avoid it, because you are required to pay it regardless of whether if you live in California, you're going to have to pay it. So there's no way around that. So people that want to create LLCs in separate states that reside in California should only be doing it for other purposes of not trying to save the $800, more so to, like I said, to remain anonymous. There are charging orders for certain states that give you more protection, things of that nature, because you're going to have to register as a foreign LLC in California anyways when you're doing business in another state. You want to make sure you have proper bank accounts, like I said, to avoid any commingling of funds, and also just for record of making sure things go in and out properly. So when you do have to do your deductions, and to make your CPA's life a little bit easier. And lastly, this isn't really required to have an LLC, but just speaking on behalf for the real estate investors here, you guys are probably investing in real estate, creating these LLCs to hold these real estate properties, right? So for the purposes of either renting it out or selling it later down the road. So you want to make sure you have all your agreements and leases with the LLC as the landlord, not yourself as an individual, even if you're the only owner of the LLC. I always say it's funny because if you're the only owner, in your head you're probably thinking it's 100% owned by me, so why does it matter? But if you want the protection, you have to set it up that way. You have to do like almost double the work, where it's, oh, I'm signing Davis Yu as member of the LLC when I'm going to sign my name anyways. Things like having that language, like signing as a member or as an agent of the LLC, is very crucial. You never want to sign things for your LLC just as your own individual name, because things like that in itself can almost pierce the corporate veil and you can lose that personal protection that you may have. So I think it's ridiculous, but those are the rules. So just always be safe. If you're going to invest in an LLC, you might as well do everything that you need to do to keep that protection, right? So when it's time, you just want to sell you off your property and you don't want to invest anymore, whether it's a short flip, you want to make sure you dissolve your LLC if you're done conducting business through it. Now, like I said earlier, if you're selling your LLC to the buyer, then it doesn't really matter because they're going to still function and continue on with that LLC. Of course, if that happens, you want to make sure you have like the proper indemnification and all that within your your purchase agreement so that you're not liable anymore for the future events. But for other than that, once the business is done and the LLC holds no more assets, you distribute your profits to the members or just yourself. You want to make sure you dissolve it, because the last thing you want is some record or some trail that the property is still owned by this specific LLC, and somebody looks it up on the Secretary of State, and it still shows that this LLC is operating. Then you might still get involved in a lawsuit, because usually in lawsuits they name like as many defendants that they want as possible. And it's still going to cost you thousands of dollars simply just to dismiss yourself, saying, hey, I have nothing to do with this. So you want to make sure you close down your business and your LLC when you're done with your, with your business, or you're done. You no longer have ownership of that property that you were doing business with. Another reason for that is unless you dissolve it, the state of California will continue to charge you for the franchise tax. And if you don't pay because you're like, hey, I sold that 4 years ago, but your LLC is still running, and if your LLC is in bad standing due to like a suspension from the franchise tax board, then now now your credit's going to get screwed up, and now they're going to be coming after you for that amount plus interest, which is the last thing you want to do for something you've already gotten rid of and potentially at a loss for, right? So when you want to dissolve, depending on what state you're in, you need to wind up your business. You need to follow your state's requirements for dissolution. So make sure you check your standing with the Secretary of State, make sure you're in good standing, meaning you paid all your taxes. You want to transfer the property out of the LLC before dissolving, so that there's no issues with like title being clouded. Notify and pay off all creditors, pay off your debts, close off your bank accounts, cancel all your business licenses and permits, distribute like any remaining assets to the members. And that's going to be listed in your operating agreement, how you're going to do that, how you're going to dissolve, what the wind up process is going to be like, pay off all tax balances, and then of course file the appropriate dissolution and cancellation form with the SOS. So the dissolution form is going to be more so if there might be like a member that doesn't want to dissolve. A cancellation form is like the dissolution process. If all members on board, they're on board with the dissolution. And then of course, close out your EIN. So that's kind of just the general gist of, LLC. I took you through like a quick run through of, the pros and cons of having an LLC, why you might want one, and also dissolving one. And I'm looking forward to answering your questions in more detail here that you guys might have, but I just wanted to present some alternatives to having an LLC. In no particular order. So there's partnership, GPs, LPs, that you might have some pros. There's fewer qualifications, lower formation costs, liabilities allocated based on partners' interest here. Some cons, it does still require multiple partners. And the downfall is there's no shield from personal liability, right? I mean, limited partners, they do have some extra protection, as in their liability is capped at their investment. But GPs, there's no pretty much limitation. Some considerations to think about before you just enter into a straight partnership is, how many properties you guys own, right? If it's few, then maybe you don't want to do it, right? Or actually, if it's few, then maybe you do want to do it, because the startup costs are lower. At the very minimum, you want an umbrella policy. So usually umbrella policies are taken so that if anything, if the damages or liabilities that you face are in excess of maybe your homeowner's policy, you want that extra coverage. Usually umbrella policies start off at a minimum of $1 million. So this is typically used for additional liability insurance in case you're sued as a result of any damages that arise on your property to, like another person or the list that I've mentioned above in the slideshow. And usually it's on average about $300 a year, $1 million in protection. Some of my clients, they like the ones that are super, super, super risk averse. They'll do, of course they'll have their homeowners insurance. They'll get like an umbrella policy, and then they'll get an LLC on top of that. some will like create like multiple LLCs for each single property, and they get an umbrella policy for every single location as well. So it really comes down to, the value of your assets, how much personal assets you have, and also just your risk tolerance level. But more often than not, I mean, I'm saying if you're not going to have an LLC, at the bare minimum, please look into getting an umbrella policy. If you have an LLC and you don't have too much in personal assets, and you follow the formalities of an LLC, you don't really need an umbrella policy with that much coverage, because your exposure is going to be capped at whatever you have in the LLC anyways. But for those of you that, don't want to lose anything that your LLC owns, like, and for example, like the actual property, then it's worth at $300 a year to get that extra umbrella policy, so that you don't necessarily have to potentially sell the home or come up with that money in a lawsuit that's, maybe up to $1 million, right? And then of course there's the corporation. Holding like a rental property or investments through a corporation is pretty similar. It's just more so on the end of the extra formalities you have to follow by having a corporation. Oftentimes, corporations exist for the purposes of having foreign investors. All right, for a lot of people that run the operations and are investors in California or in the U.S. but have outside investors in another country. Those are usually more common. Things that, of course, you have to look for is just the double taxation. And like I said, depending on who the investors are and what country they live in or state, and what your CPA says, you might be able to avoid double taxation, but that's pretty tough to do from my experiences so far. But sometimes you have to just deal with it in order to get into situations where you can join partnerships with other investors and form a corporation. And if you're still making more money, it's worth it, but something to consider, right? And then of course, trusts, it can be a revocable trust, irrevocable trust. Trusts are typically set up to avoid probate, not necessarily liability. But for irrevocable living trusts, meaning you can't really change it in your lifetime, then they do offer some additional liability protection compared to just a simple revocable living trust that most of you guys are probably more familiar with. Of course, it allows the rental properties to pass on to its heirs, your beneficiaries, and it also avoids probate. But if you have an LLC and you set up your LLC where your beneficiaries obtain ownership of the LLC, or you put that LLC into a separate trust, then it's not necessarily needed to create an extra trust for your rentals. Depends on your situation. And of course, this is for California investors or residents, but I think it's also applicable to those of you guys in Texas or any other states. But you may want to consider creating an LLC in like Wyoming or Montana or Nevada or another state, and having your resident state be like the foreign company for the purposes of having that extra liability protection of remaining anonymous and creating extra layers of protection so that creditors or your tenants that hire plaintiffs' attorneys that want pretty much to take all your assets, make it a little more difficult for them to find out, who you truly are, or, get a hold of your assets, right? Because litigation is expensive, and unless it's a really big case, a lot of attorneys aren't really going to go through like 15 different companies to try to figure out who they can collect from. And then just quickly, just wanted to give 2 examples of Montana and Wyoming LLCs, the filing fees, and maybe some reasons why you might want to consider having an LLC there. More specifically for Wyoming, no state income tax, and also lenders can't target other members in case like a specific member defaults on something. And the most important thing is the anonymity. So you don't really have to state specifically who the name of the members of the LLC. So they won't be able to trace you unless they somehow hire like a private investigator or you left the paper trail for them to find you. What I always like to say is this works for a lot of people, but if you're ever in a situation where you do something completely reckless or you act in gross negligence and you purposely create the situation that creates the lawsuit, the damages might be pretty significant and high, where having 15 holding companies is not necessarily going to protect you fully, because if you just have a dedicated plaintiff and a dedicated attorney, they will do whatever it takes to find out who you are somehow. And a charging order, Wyoming has a charging order that protects you. So in case, let's say something happens, there's a lawsuit, they technically can't foreclose on the property, but distributions made to you will be pretty much taken until you fulfill or pay back all the amount that's on in the judgment. But let's say that you have a manager and you know that all the profits are going to be paid for this judgment order that a tenant receives from you, and you just don't make that much, then yeah, you can try to figure out ways to work around it by reinvesting into the LLC, where you're not giving yourself any distributions, because that would actually be paid, versus states like California, where if you own a membership interest in an LLC that owns a property, they may require you to sell off your interest in that LLC to pay off that judgment. So is an LLC right for me? So a lot of things to consider. Do you plan to refinance within the next 6 months? Because some lenders, they have rules on how often you can refinance, right? Does your lender permit transfers to an entity? Do you have multiple properties? Which states do you have these properties in? When was this property purchased, and who was it purchased by? Was it by you as an individual, or was it by a separate LLC? And also ultimately just where you're at in the stages of building your business or investment portfolio, right? Where are you at in real estate investments, and how much do you have to lose? What type of assets you have, and just your future plans for growth. All these things need to be discussed with either an asset protection attorney or real estate attorney, just to figure out, at least on the legal end, what's more beneficial for you. But oftentimes, it is important to talk to your CPA, because at the end of the day, we don't want to engage in these real estate investments if it's not going to be profitable for us, right? So, of course, it's very important to think about the legal aspects and protecting your personal assets from your, investment properties, and keeping it separate. But we all do this to make a profit at the end of the day. So I think it's always important to have a sit-down meeting with your CPA and your attorney, just so that you can kind of cover yourself on the tax end, to make sure that you can set things up so that you can receive all the tax benefits, and then align that with the legal structures and strategies you can take to kind of protect yourself on the legal end, while utilizing all the tax benefits you can from the tax strategies that CPAs and financial advisors provide for you. So, I went a little fast. I wanted to leave some extra time for questions, and then I'll just go back and kind of revisit these slides as I try to address these questions. So I'm going to take one quick moment to go through these questions here. And then, Annie, are you asking me these questions, or are these questions that are asked on Facebook, or
I'm
texting you?
I'm just randomly asking questions of the ones I commonly see on SARE.
Okay, because if you're asking me personally, then I'm not going to answer it, because I can't give you free legal advice.
Yeah, we do that via call for my personal stuff.
But okay, let's see here, Olivia. Or maybe I won't say the name. Well, I don't know if you can read it too, but where should you set up an LLC if you live in California and rental properties are out of state? So depends on the state. First thing you have to think about is you want to look on, like I said, you can ask your attorney, you can check on Google. Usually I always find that real estate investors are pretty smart. So usually you like to do things yourself, and until it gets to the point where now Google gives you too many options and you're just like, oh, I have no idea what to do. But you want to make sure, you want to look to see if your state requires you to have an LLC set up in the state that your rental property is at. And if so, then you have to set it up there. However, since you live in California, you have to register as a foreign LLC in California as well. So depending on whether or not your state requires it, you have to either set it up in that state where your rental property is at, and also register as a foreign LLC in California because you live here. But if you want, for instance, to obtain some of the extra liability protections that some states provide, then now they might have to come into the picture as well. So if your state doesn't require it, right, for you to have an LLC in that respective state that the property's in, then simply you can, for instance, have like a Wyoming LLC own that property, and then have a foreign LLC from the Wyoming LLC in California since you live here. If you still want that Wyoming extra protection, then now you might have an LLC in the state that you have your rental property in, and then a Wyoming LLC own that, and then the California LLC as a foreign LLC that owns or that's connected to the Wyoming LLC. Hopefully that answered your question. If not, you can always shoot me a message. For putting a property into an LLC, is that done by an attorney or title company? Property into an LLC. It can be done by either or. Usually attorneys, we kind of dish it out to title companies anyways, depending on the situation or depending on who the client is. Sometimes they do it as a service. Sometimes they'll upcharge you. So it really depends on your attorney. But when you're transferring title and putting property into an LLC, that can be done by either an attorney or a title company. So just use whoever's cheaper, I guess, and that knows what they're doing. How come primary property shouldn't be in LLCs? Well, the thing is, for primary properties, people don't like to put it into LLCs because you do lose some tax benefits, which we can ask Tony about, of being like having a primary residence, right? If it's an LLC, it's technically considered business, so you can't really have those benefits. In addition, you like, for instance, you don't get to use the homestead protection if it's in an LLC versus as your primary residence. Another reason for that is usually people like to put their primary properties or residence in a trust versus an LLC. Because we put things into an LLC for protection, right? Liability protection. But if you're going to be the one living at the house, then who are we really protecting ourselves from, right? So usually we're trying to protect ourselves mostly from tenants. So if you're the tenant, unless you want to sue yourself, then it just complicates the process by having like the additional costs of having your primary in an LLC. Which is why typically we have LLCs to hold our rental properties, because we're trying to protect our personal assets from our rental, from any like liabilities arising from our businesses or rental properties. What are registered agents? What do they do? So registered agents, they are there to pretty much, just to make it kind of easier to understand, they're an individual or a company that's going to be there to accept like legal correspondences from a potential lawsuit or from the Franchise Tax Board on your behalf. Now they know oftentimes you're not going to be available 9 to 5, so they want to make sure that there's somebody that they can actually serve papers on if there's an issue with your business or your property. And typically, you want registered agents to be 9 to 5, Monday to Friday business hours, because that's typically when they try to serve you. So they just want to make sure that they can get a hold of someone during business hours if they need to contact you. Registered agents are very important too, because if you do get a lawsuit and they serve it to the proper agent, or maybe you were the agent and you listed the home that you lived in maybe 3 years ago, there's alternative ways that they need to serve you. But if you're not there to receive the service, then they can obtain like a default judgment. And in your eyes, you never even knew there was a lawsuit, but since they properly served it, it can go into default and you just lose. So you want to make sure you designate somebody that's going to be there to collect. A lot of times people use their attorneys, sometimes CPAs. And another reason for why you wouldn't want to put yourself as the agent is because since people can look up who the agent of service or process is, you don't want it to be like, you don't want people to know where you live, right? Okay, what are some of the legal fees and costs to transfer ownership to an LLC? The thing is, okay, so when you want to legal fees and costs to transfer ownership. So it really depends. if it's transferring from a property that you own 100% of into an LLC that you own 100% of, then of course the legal fees and costs are going to be the creation or formation of the LLC or revision of the operating agreement. And after that, the transfer is simply just going to be transferring title, right? So the cost won't be too high. Let's say you want to transfer ownership from yourself as an individual to an LLC that with other investors too, then it's going to increase a bit more because now every other member might want to read it, might want to have their attorneys look at it and all this stuff. So the legal fees and costs wouldn't be too high, but of course you want to make sure that you talk to your CPA as well to discuss the tax implications of doing that. Do we need an operating agreement if it's just a single owner LLC to hold my rental property? Yes, you do. Like I said earlier, sometimes if you own it, you think you can get away with things, and a lot of the times it's true. But the preparation of having an OA like ready is in case something happens so that we can provide it, right? So even if your LLC is owned by one person or 100 people, you still do need your operating agreement. Because like I said, if you're the single owner LLC and your tenant in your rental property files a lawsuit against you, they're still going to require that operating agreement. So if you don't have that operating agreement, then you lose that liability protection, meaning they can go after your personal assets. Or just because there are multiple people in a partnership. Do we need an operating agreement if it's just a single owner LLC to hold my rental property, or just because there are multiple people? Also, I think that answered it. It doesn't matter. For the Montana and Wyoming LLC, can we open one to hold our property in California if we're in California and still be anonymous? Yeah, so the purposes of that is, so the thing is, usually you want to set it up like for that Montana or Wyoming LLC to own that property, right? So what the purposes of that is, if something happens in your California property and a tenant tries to find out who the owner is, then they're going to try to look up this Montana and Wyoming LLC and then see like who they can go after, right? But by having that Montana and Wyoming LLC, you're almost you're attempting to cap off all liabilities at that end, at that Montana or Wyoming LLC. And since we don't have to disclose exactly the name of the individual who owns that Montana and Wyoming LLC, it just requires a lot more work for them to try to figure out who owns this Montana Wyoming LLC, which is why the purposes of that is to kind of cut it off and not even give them the opportunity or create that extra layer of protection. Versus if it's a California LLC that owns that property, it's gonna name who owns it, right? So then that's a higher chance of them going after you personally.
So Davis, going back to that question is that I know there you mentioned that it was a holding company that holds the LLC that holds the property. So in this situation, can we skip that middle one and just directly own it?
Yeah. So what I mean is, yeah, you can still be anonymous because if the Montana or Wyoming LLC owns that property, they're going to be listed as the owner, right? And then when they look up that Wyoming or Montana LLC, you're going to have that anonymous, like you can remain anonymous and have that protection of who owns that Wyoming or Montana LLC.
Got it.
But as far as cutting out the middleman, that's going to be, like I said, it depends on what state your rental property's in, right? Like I said, so if you're in Florida, if you have property in Florida, but you live in California, but you want to have an LLC in Wyoming, then unfortunately, depending on whether Florida requires an LLC in the state that the property's in, you might have to open up 3 LLCs. But if it's a state that doesn't require it, or for instance, for your case, let's say you have a rental property in California, you live in California, you can set it up where the Wyoming LLC owns the Wyoming LLC owns this California property. So if they try to figure out who the owner is, it's still going to state, it's not going to dictate like it's not going to state who owns that Wyoming LLC, right? But if they do their extra research and find the foreign LLC that you're going to be required to file in California, more likelihood that they can find out who you are. So yes and no, as in for a general search on Secretary of State, you'll still be anonymous, but if there's a huge lawsuit, you won't be able to remain anonymous. And that's kind of why people like set it up where they have numerous holding companies and numerous LLCs, so that they're trying to trace out who the owner is. But if you set it up so much like where there's just too much going on, a lot of times they just give up. But if it's just one LLC and you, much easier to find you.
Gotcha. Thanks.
From what I've heard so far, it seems like an umbrella policy may be cheaper and offers enough protection for a rental property in California, say worth $2 million. So like I said, yes, to answer that question, if you get a policy of an umbrella, like a policy for like 2 million or more, or 1 million, or whatever, how much like your property is worth, and as long as you read the fine print in that umbrella policy to make sure that they cover specific lawsuits, then yes, it's definitely a cheaper method than to have to create an LLC and to continue to pay on an annual basis, let's say in case nothing ever happens. However, let's say something happens where it's like higher than the damages are higher than the policy limits of your umbrella, then now you go into the situation where they can go after all your personal assets, even if it's like, let's say like just even by 100,000 more. And once they uncover that and realize you have a lot of personal assets, then now their claim might magically go from 2 million to like 5 million. Is it true that an LLC is not really bulletproof, because once people can find out the owner of the LLC, they can still go after their personal assets? So I always like to say nothing's bulletproof, but it just really depends. I think if you're doing things properly, if you set up an LLC, properly fund it, make sure you're up to date with statement information, pay your taxes, have an operating agreement, keeping everything separate between yourself and the business, no commingling of funds. If it gets to a lawsuit, then you will be protected, right? A lot of the times, unfortunately, we enter situations where if the individual or your tenant or whoever got hurt on your premise or your property, actually did get hurt, and the exposure is very high in terms of like the damages, then it's one of these situations where unfortunately, like you just hope your insurance is going to cover it and you usually are going to settle out. But if it went through the stages of litigation and you went to trial, unless the jury want to decide on, finding you guilty, even if you did nothing wrong, which is possible, but I would say the percentage is very low, then your liability will be capped at the LLC. So everything that you own in the LLC will still be on the hook, but your personal assets should be protected. And I say this, and I'm just kind of talking a lot here and just going into another tangent because I'm going into a rabbit hole, because I'm just trying to think out loud and tell you what usually happens, where in my head, I think of bottom line. And what I'm trying to say is they should not be able to go after your personal assets, but because you have to pay legal fees, all this to prove that you did nothing wrong, you're still going to spend money. So I always think of it as like it's still personal assets, but just to answer your question in short, it's not really bulletproof, but if you actually follow all the rules of an LLC, your personal assets are supposed to be fully protected.
I've got one more question from Facebook. This person wants to know which is better for the LLCs, the Montana one or Wyoming, if there was a preference.
So I think that if you weigh the pros and cons, and just if you're okay paying like an additional like $30 and just $40 on an annual basis, then I think Wyoming is preferred. And from my experiences so far, and my current clients in the last couple of years, people are gearing towards Wyoming over Montana. But like I said, of course, we have to consider like where you live and where your property is located too. And then I think I covered the questions in the chat. I'm not sure if anyone had any other questions or wanted me to expand a little further on anything. Or if you want to just listen to Annie and myself talk about whatever we want to talk about.
All right, there's another question in the chat.
If I have multiple LLCs and one holding LLC, do I need to register all in California as for an LLC or just the one holding LLC? So let me just make sure I have this question. If I have multiple LLCs and one holding LLC, do I need to register all in California? And I'm guessing, are all these other LLCs, are they all in different states, Robin? Okay. And then what about the holding LLC, holding company? Where's that in? Okay. And just last question, and where's your resident? Where do you reside? Okay. So you live in California and your holding company is out of state as well, along with multiple LLCs. Okay. If I have multiple LLCs and one holding LLC, do I need to register all in California as foreign LLCs or just one holding company? So if that one holding company is like on title and owns the actual other LLCs, then I would say that you can just register that California holding company as a foreign LLC in California. As long as that holding company is like the 100% owner of all the other LLCs in the other states. Yeah. Okay, well, I think I covered all the questions. Annie, do you have any questions or fun facts to share about SARE or any upcoming events besides SARECon in July?
Oh, shizzles. So all I did was plan out the parties and the pre-party and after party. And I will get to the schedule very, very soon. So I'll be uploading that onto Hoova. And so if you guys haven't had a chance to check out what we do, we pretty much gather all of our members from all of the states to come together in California once a year for a giant get together and party. So be sure to check us out for SARECon 2023. That'll be on July 28th. 9th and 30th. The original was just 2 days, but we're just getting longer and longer because there's so much fun stuff. So just try to get there on the 28th if you guys can. Aside from that, yeah, so let you guys know that this is actually a monthly series. So we alternate between the legal side and then the taxes side. So this month, our bestie Tony is over in Italy. And so next month, he'll be back for another episode. It's kind of the mid-year, you know, you can't even believe it. It's a blink of an eye. We're already halfway through the year. So if we fuck up on any of our taxes or need to plan in advance or for any major decisions for the rest of the year, this is the time to discuss it. So come back and check us out next month. And then I'm also going to be recording this and sharing with the members if you guys missed it or just need to go back to things.
Yeah, and a lot of times, sorry, and I just want to touch on that.
Yeah.
A lot of times Tony and I are trying to do this where we're both present, because a lot of the questions are like tax and legal related, where you ask your attorney something and they're going to say, hey, you got to talk to your CPA and vice versa. But like I said, Tony's having too much fun in Italy, so he wasn't able to join us. And last time I think I missed out for some reason as well. But we're trying to both be there so that if you guys tune into the webinar and have questions that you might need a tax and legal answer to, then we're both going to try to be there. And like Annie said, it's going to be on a monthly basis. I think we have it scheduled for the next like 6 months, but it might continue. So if you ever have any topics you want us to discuss, right, just feel free to like spam Annie's email at annie@sare.com. I'm just kidding, I don't think that's your email, but it might be. And yeah, and then, but lastly, if you guys all want to just quickly put in your chat, like those that are not in California, like what state you reside in, and then maybe I can offer any like tips for like LLC formations if I know any. Just real quick if you want. If not, then Annie, I'll let you take over.
Yeah, and so that was pretty much it. But I want to know, Davis, if people have additional questions, how do they get in contact with you?
So you can find me on Facebook or on in the SARE group, but I think Facebook Messenger has been like very bad lately, where I don't get messages and then people get upset because there's like message requests
Mhm.
if you're not friends or something. And then one time I found out there's like, yeah, but you can shoot me an email. It's dyu@dylawcorp.com. I don't know if you see it on your screen, or I can put it into the chat box real quick. Or you can, you can give me a call at my office, or you can follow us on Instagram for quick tips on real estate, things of that nature.
And why don't you guys, while we're at it here, why don't you just go and find Davis on Facebook and just add him really quick because he's cool. So if you guys
Yeah,
ever
so yeah, if we're friends on
have-
Facebook, or even if we're not, you can always just shoot me a message. And then if I don't respond to you, then just shoot me an email.
or bug Tony.
Or get Tony to, yeah.
He's our
So
he's our momager.
he's definitely a lot easier to get a hold of. So, and if I don't get to you like real fast, of course I apologize. But if it's like an urgent matter, you can always call my office, and that way, I'll be there to answer any questions you may have. And then I think I got a couple of responses, but unfortunately I don't have too much familiarity or experiences with Louisiana law. Sorry. But if I think of any, shoot me an email and I'll try to send over any newsletters or things that come up in my inboxes, because I have some contacts that practice out in Louisiana.
Awesome. All right. So thank you guys, everyone, for your time tonight. And I can't wait to see you guys next month. Take care. Goodbye.
Bye.